What's up, YouTube? I'm feeling a little congested today, so don't mind me. My nose is a little runny. Listen, welcome back to another video. If you wanna learn trading, why don't you come and learn from Siri? All right. So, what's going on, guys? Today's Monday. October 30th. Damn, I almost forgot the time, but it's October 30th, 2023. And so today's um day was very beautiful. In my opinion, today was the day to trade. Out of all the other days out of the week, today was one of the days that you would want to trade. Um, Me personally, you guys know how I feel about Tuesdays, man. We stay away from them Tuesdays, especially when there's heavy news volatility for Tuesday. Yeah, man, it just doesn't work out, man. I just tend to stay away when there's a lot of volatility. Why? Because I have to protect my capital. I have to preserve my capital. I have to preserve my mental capital as well because, listen, it's not worth pushing and, having this effort to want to do things in a market, but the market isn't in the best conditions for you to push your effort. So, which is why I go back to the whole knowing when your trading conditions are high probability. That's one of the most key, most important things out of anybody's trading plan or anybody's system. You have to know when the conditions are set for you to really make the right decisions. You know what I'm saying? So, let's say if you did want to push today, you know what I'm saying? What were the were the probabilities in your favor? So when you want to push and make the effort to run equity or you want to trade and really just have a good day, you don't want to have those or you don't want to have that energy or that effort set aside for low trading probabilities, you know what I'm saying? Or low trading conditions. I would suggest you stick to the high probability days, the days that have the least amount of news outlet behind them and the days that just seem a lot more clear. So, like I say, man, news is one of those days, one of those things where it could create a lot of manipulation, especially for certain outlets. So you always got to be paying attention and cognizant of exactly which news um, volatility markers you want to be trading. I mean, like I said, every single news has a different or gives price a different type of attitude. Like, you know, NFP has a specific attitude, right? FOMC, a specific attitude. PMI, a specific attitude. So you guys have to be cognizant of which trading outlets are going to actually yield you the most results. And today was one of those days, right? Today was one of those days where, if you guys haven't heard ICT mention it before, but he says sometimes where a week where there is a week where there's full volatility. The days with the no news have it's like a highway with no cars on it, a freeway with no cars on it. You're able to travel or navigate through the highway or the roads, very smoothly, very easily, and you get to places faster. You know what I'm saying? There's no manipulation in price. You know what I'm saying? It's the same thing, That's like the analogy there. So, today there was no news, and that was something that I was very aware of. So I was like, if I'm going to take my chances, I'd rather do it while there's not much manipulation. Okay, I'd rather do it while there's not elevated risk if I wanted to trade for this week. Okay, and that's exactly what we did. We took advantage of that. Today's Monday, and everything went well. So for Tuesday, I won't be trading. Wednesday, very likely that I won't be trading either because the morning session is going to be whack as we know. It's PMI, um, and then there's also FOMC at 2:30. So they're definitely going to be holding um, news all the way out to or price all the way out to 2:30. And if not, 2:30 may just be slow as well, and it might just be stuck in a range. Friday is the day where they're gonna push outside of the range. I can tell you guys from my experience, Friday of this week, on a week like this, Friday is gonna be the day where there's gonna be a parabolic expansion somewhere. We just have to get in front of that move when the conditions are safe. You don't wanna sell before 10 a.m. You know what I mean? You don't wanna sell at 8:30 a.m. on Friday. You wanna be in after the manipulation has gone through. So that's gonna be towards that 11 a.m. time. So you wanna be in after. You know what I'm saying? And also, if the move is already gone, by the time that you get in, don't go chasing after it. Just make sure that it's appropriate. Just make sure that what you're doing is appropriate. That's what we have to focus on you know, disciplined actions, right? Because we could focus on the actions that we currently have now in front of us. We have to seize the opportunity with the correct actions because if we don't seize the opportunity with the correct action, we're just going to waste our time. So I don't want you guys wasting your time out here. I hope that you're taking your equity, your demo accounts, everything extremely serious because the whole point of all this is not to flex, saying that you caught an opportunity. But the whole point of trading is to make money. You guys all came here to make money, so let's do the correct and proper actions to make money, okay? Get that in your head. You didn't come here to be a sniper. Although it looks cool and all flashy and stuff, what you came here to do is to make money and seize the opportunity that is in front of you. So, anyways, that's enough of that. Let's go on to the charts and let's look at what happened today. This is going to be a short one, but one that's going to have some gems all over. So, let's go into trading view. So, we're going to start our daily process on the daily time frame. There's no reason for you to be going to the 5 minute first, or the 1 hour first, or the 15 minute first, or the 1 minute. Definitely not. If you're on the 1 minute before you even on a date, man, you got some work to do. Do not go to the lower time frames to find out where price is going. Always start your time or your process on the daily. The daily is going to give you the most information you need and to be honest, if you have to even zoom out from a perspective that's outside of the daily, because the daily is not even giving you enough information, then that's when you would go up time frames such as the weekly time frame, the monthly time frame. The more that you go lower, it's all the way to the left of the scale, which is like the 5 minute, 1 minute. Those are the more that you go to. Okay, oof, wow, look what I just got here. See, this is why it's always good to. This is why it's always good to do this. To be so this right here is the daily. That middle line is a daily. Everything on this side is higher time frame. We're talking about weekly, and here is also monthly. Okay, yearly, whatever you want. Everything to the left of this chart is below the daily. So the daily is the origin or that 0 0 on an XY chart. Um, you would have here the 4 hour, the 1 hour, the 15 minute, the 5 minute, the 1 minute. The more to the left you go, the more precise you are trying to get. Okay, you're trying to get more precise with your levels, more precise with your PD arrays, more precise with your timing, right? Does that mean that you have to be all the way to the left of this, you know, timeline or precision timeline? No, you don't. The more to the right you are here is more for specific key levels from a daily time frame and high probability draws on liquidity. So I would say you have to find a balance between this and understand that you only go down to the smaller time frames for precision, and then narrative is the right side, which is the higher time frame. So enough of that. I hope that that was insightful because for me, this is how I see it. So let's put on some daily, the daily stuff that we're looking at. These are the levels that are very, very important to me. I would say that everything else is not worth the time and attention. So, I had mentioned to you guys on Friday that we're gonna play Thursday's range. This is a um, pretty much a 300 point range. Yep. And Price is gonna play inside of this range for pretty much the majority of the week until the day that is gonna create the parabolic expansion, which on my expectations it's gonna be on Friday. Friday is gonna create the parabolic trade for us to capture a good move. I would say that for the rest of the week, though, they're going to play the range. So Tuesday, so like Monday today, they played the range. You see what I'm saying? So yes, we wicked above Thursday's high, right? Which is great and all. But the reason why I sold in here is because I want them to get back inside of the range. I sold this up here. Of course, daily consequent encouragement level is hit there. We have Thursday's high being taken, so we're, getting in after the liquidity is taken, so then I sold that. That was my trade idea for the day. But I want them to keep playing inside of this range and create inside days until Friday comes, and then we'll see a parabolic move lower. But as of right now, something kind of like what I would like to see is them to play a Indian run pattern. So for tomorrow, maybe like a down day taking out this candle's low, but I want to see like a three Indian pattern here, and then on Friday we just tank lower. That is exactly what I'm looking for. But tomorrow, we're looking at all these levels here. So if we're looking at it from this perspective, this is that fair value gap. We have this candle's low. Then we also have this candle's low here. So these are like the levels that I want to see price play inside. As you guys can see, this was a gap up. And if we're looking at body's perspective, there's only buy side delivery here. And then from this candle's opening price and below, we only have sell side delivery. So they're going to want to deliver some buy side delivery in here. And the way that they're most likely going to do it is play inside of this range, take out Friday's low, and then scream back inside of the range, and then possibly go up here, or they could just play this. But they're gonna play this range regardless. I don't care how they do it. I just know that I don't want Thursday's low being taken out until we're gonna expand outside of the range and go lower. That's the biggest key point right there. And then I want them to keep playing around these highs here. Uh, I want to see Monday's high being taken out again. I want them to be cruel. Just do that and be cruel. Um, and then the high that takes out Monday's high again, I want to see being taken out as well. I want them to be cruel this week. And I want this expansion that's going to come, or that's brewing around the corner, to be large and expansive. That's what we're waiting for. So, my anticipations are play this range. Okay? Um, as we're trading, it's also important to note that Friday is going to be the first. Actually, no. Let me see. So yeah, Wednesday is going to be the first day of November. November for me is a very, very expensive month. Um, the reason being is because it targets higher time frame liquidity levels. Very large ranges form in November. Um, so Friday is going to be the 3rd of November. So that's our designated dates that we want to take action on. Um, and I said after the news. You don't want to be in before the news, or try your best not to be. So that's that. Now um, let's go out to the 5 minute time frame. We'll go out to the 5 minute time frame, and then we'll put a little bit of makeup on. Sorry about that, guys. So I'm not feeling so good. So let's put on that overnight session. And this is what we have available to us. So a lot of you guys were like, yo, why did you sell? So this morning I had caught the sells from here, right here. These were the sells um, that I was catching, and then I think, not that I think, but I sold it actually in here. So I got it out in this candle here because this fair value gap here was being filled. So I got out here and I said, hey, I've already caught, you know, X amount of points. I'll be good here. So let me just pay myself. I was very content with that. All this happened. I didn't care to be part of the rest of this move here. So I just let it play out. And then my last opportunity for today was also this right here, order block, failure swing, and then I was targeting this up here, these rejection blocks here. Um, but yeah, this was pretty much the day. So let's just run towards the ideas here real quick. So there was a lot of opportunities today, and I think that the highest probability opportunities today were simply the overnight session. We had overnight session here from, again, overnight session is from 4 a.m. to 8 o'clock a.m. So to 8 a.m. And then what we want to see is, let's say we're bullish, or we have a premium level that we want to see being targeted. We want to see overnight session low being taken first, and then we want to see run to that higher time frame liquidity level or key level. If we're bearish, we're looking for the drawn liquidity in the discounted area, and we want to see overnight session buy side liquidity being taken first, and then they run lower. And I also told you guys, this is something that I want you guys to get in the, in the hang of. First run into overnight session low is the first idiot. Your job is always to be the second idiot. So they're gonna take out this low again because the first idiot placed their stops here and gained too much confidence in trying to buy it just like that. So then we have these large candles here. This is for 9:30. Comes there, stop hunt, second idiot. This is where you want to be loading in positions in here. If you're too afraid to trade turtle soups, learn how to scale in. It's very important. Learn how to scale in. Or just wait for price to return to the opening price here, and then you could see this wick or snap back inside of the range. You could buy it there once it gets back to the opening price. But you want to be scaling in. So if you want to scale in into a turtle soup or want to get into a turtle soup, I would suggest scaling in. How do you do that? Because you never know how low this stop hunt can go. You really never know. But my suggestion to you would be, hey, if you have a lot size, one lot that you want to get in with, what you can do is, if you're a little impulsive, I would say try to build in positions like as soon as we get to the discounted area. So here, this is like where you want to be building in positions. Let's just say here. Um, you could be very, very aggressive. You know, put in a quarter or a third of the position of the lot size, which would be 0.33. You'll put it one here first, and then try to make most of your scaling in opportunity at the very discounted portion of the range. So that would be here. So when you see prices expand that wick, just slowly put in your positions. You don't want to rush into it because again, it can go lower. And then for turtle soups, you want to have rules around it, maybe like set stop losses, like 20 points, 30 points, or 15 points, whatever it is. I would stick to a larger stop loss and just risk accordingly to that stop. I would say 20 stops, 20-point stop, 25-point stop, or 30-point stop on turtle soup. So be the second idiot to get in, and that's exactly what we get there. And then price expands to Thursday's high. I told you guys Thursday's high was on the menu. It houses liquidity, so that's exactly what we see. Um, Consequent encouragement, we get that here. So we have accumulation. All this is an accumulation. You can use this as a failure swing, opposing liquidity run, and then we have liquidity, fair value, order block, all that good stuff. Once they take out this candle's low, you're able to trade the retracement after the change in the state of delivery. Keep in mind, I always mention it in every other video, the change in the state of delivery always offers a retracement after the order block has been confirmed. It's a very important thing that you must understand. So, had you been in here, would have you been scared of this retracement? Absolutely not. You're not supposed to, because if you understand how order blocks work and how the change in the state of delivery works, every time an order block gets validated, or the order block that forms at liquidity, at fair value, if you know that is your designated order block, then you can do things like drawing out 50% of it's a large order block. We have the 50% there. Look at where price wicks back into. We were traced back into the 50% of a large order block. And then price goes lower. So had you been in this cell up here like I was, like here, then I had my stops above here, you could have been very patient and had your stop loss open still, not trying to put it at break even because you don't want to risk, or you want to take risks off the table. Wait till the retracement is done, and then price expands lower, and then you're able to say, okay, now the retracement is done, stops at break even, then lower prices. These are the things that you want to see. Biggest thing for me was, hey, was after we had taken overnight session, there was only buy side delivery. So it was important that we had sell side delivery to make this an efficient range. From this point in price here and above, it was only sell side delivery. Then all of these candles needed to go down because we needed down close candles here to make this delivery efficient. And that's the most important thing. Then we have here, this price goes down here. Um, we have this order block, change in state of delivery. We can go for buy side liquidity now here after this candle's high is taken. And then there was a failure swing, or internal liquidity, retracement seek internal liquidity. I had taken this buy right here, waited till they punched it in here, and then I just bought it there. Had my stops right here, and I was just patient and allowed price to go here, this level right here. And I didn't want to make too much out of this range because this is a large range. So although yes, this happened here, I wasn't part of this move because I had already known that, hey, price already moved. And this is just always, trying to keep a realistic approach to your trading. Here was a large range of 130 points, and then down we had another range of 160 points. For me to demand for them to run up another 130 points up and down, it was just kind of not realistic. So what I did was I found a small range. You know, what am I trying to capture? 50 more points? Okay. Does this range offer 50 points? That's a realistic approach. You can do that. Um, had you been in here, kudos to you. Me personally, I wasn't on the charts during this time, and I didn't really care to see them run higher as they did. And this to me is just them squeezing out those who are short and who are holding short positions, thinking that price is just going to continue lower and going to continue on the normal schedule of lower prices on a higher time frame. But like I told you guys, it's only Monday. They're going to play this range, and they're going to want to see price. Um, they're going to want to see people get into price. They're going to try to engineer liquidity by allowing people to get in here, thinking that they're going to catch a short. So again, this high to me is in trouble. This high to me is in trouble. I want to see them play this range, and if not, possibly just fully fill in this fair value gap on the daily time frame, and just play it. And then on Friday, we'll just crash lower, crash, lower prices. So allow the liquidity to build, right? Although this is a beautiful trade for today, there was beautiful opportunities. Allow them to build, allow them to build liquidity and set up the stage for a parabolic Friday. Um, so yeah, that's the whole idea there. If we go out to the 1 minute, I just want to point something out to you guys. I had mentioned that I had mentioned that let me see, something is on here. Okay, cool. So I had mentioned that um, there's a whole reason of why I had my stops in a certain place on uh, on this trade setup here. So my stops were above this candle's high here because this is an efficient range. This right here was meant to be a what? A breakaway gap because we're inside of an efficient range. So me placing my stops above this breakaway gap is ideal. It's an ideal thing, right? When we had that retracement there, I sold it into here, institutional order flow entry drill. This is going to be a breakaway gap. So all we have to do is place our stops above here. No fear. The gap is here. Um, then price goes lower. Boom. This is the small retracement that I was speaking of on the 5 minute. So you expect that. This was the 5 minute order block. It's low and then price retraces. You can expect this. Don't be scared. Then you can just allow price to just go lower. So then I gave it up here. This is where I was done. And here there was a immediate rebalance. So you could have sold it here. I also sold it here. I sold it up here. So was the trade idea there. And then I asked everybody in the Telegram channel. Again, if you're not in the Telegram channel, you're missing out because that's where I'm posting my entries. That's where I'm posting talking about what's on my mind during current live price action. Um, glory to God, one day I'll be able to, through the, mightiness of God, I'll be able to just, you know, do live sessions where I will be showing you guys live streams of what's currently happening in the AM session. I'll be with you guys, and hopefully there will be a time for that. But as you guys can see, my stop loss was right here, above that breakaway gap. Trading in here, that was my first sell. Then we had price for that immediate rebalance here. That was my second sell. Then we had another immediate rebalance in here into this order block. That was my next sell. And then the retracement was coming in for that. I left my stops exactly where they were. I didn't have to go in here because this is a breakaway gap. So we trust that narrative. And then price just tanks lower. And then we have that, right? This is where we got in. This is where we got out. Then we had this right here, the buy at this order block. You know what I'm saying? And then boom. This was like 50 points extra. We caught like here we caught like 100 points, almost like 92 points, and then here we caught 50. So that's like about 140 points on the day. So we have to be grateful about that. And yeah, that's exactly what happened today. I don't want to hold up too much time of your day, and I hope that you guys have a great day, a blessed week, right? This is a great beginning to the week, and I had said to you guys all, I will see you all on Friday. I will be making videos for Tuesday, Wednesday, and Thursday, and Friday, but you guys will see me trade on Friday. Friday is where I plan to trade. If for any reason the plan that I plan on Friday is not in place, then I won't trade Friday either and I'll just let it miss me. That's fine as well. So let's just appreciate the beauty that happened today. And yeah, we'll allow the rest of the week to pan out. And then I'll see you guys on Friday as far as execution. So let's prepare to plan on Friday to make sure that we get in the right opportunities on Friday. So I'll make a pre-market video, and then a post-market video on Friday because that's the day of execution. So that's when you'll see me post 2 uploads in one day. so that way you guys get the idea of what I'm looking at before the market and what happens after the market, and then you can see how um, you know, a trader with experience, not a professional, but a trader with experience, plans out and executes on that plan. Period. So that is all that I can say for you guys today. Um, as you guys are already familiar to this quote, I hope that you guys enjoy it. But listen, good, better, best. Never let it rest till your good is better and your better is best. And just remember, guys, that God is good all the time. See you guys. Peace.